I think one of the biggest effect of that widening interest rate is as a buyer, as an investor, we become more cautious. And we tend to offer a slightly lower price than what we might have during the better days. And the sellers have not adjusted their asking price. A lot of them still think that one day things will bounce back, unless they really need the money. Some of them just say, hold on, let's just wait. The price gap, therefore, have widened a lot between the buyers and the sellers. And you've seen, not just for us, but across the market in different countries, fewer deals. And I think everyone needs to go back to work out what is the equilibrium. Someone will need to move. I don't think the buyers will move, partly because we are all really facing higher funding costs. So it's when sellers, when valuers will see that there need to be adjustment to property values.
Now, we got borrowing costs in Hong Kong at a 14-year high and on their way up. What is the average net gearing? How are you guys in terms of interest expenses?
I think what we have done is managing it prudently, 22.7% gearing, about 50 to 70% fixed rate. So we want to make sure that we lock in sufficient amount. And so our average borrowing cost is still below 3%. Obviously, as some of the debt mature, there is a adjustment upwards. We are trying to make sure that we manage it carefully. But at the end of the day, real estate is supposed to be an inflation hedge. So to the extent that inflation will flow through to tenant sales, we should see also our rental income adjusted upwards, probably with a lag. And that's where it depends on how we diversify, not just by country, but in terms of different length of leases, so that we have a bunch of leases readjusting to market rents every year.